Our guest today at Money Show is income expert Bryan Perry, editor of Cash Machine. Thank you for joining us.
Okay, good to be with you, Zach.
At the start of the year, you chose two stocks as top picks for 2017, PayPal and Blackstone Group. They have risen 33% and 21% respectively. First, let's look at PayPal. What was your reasoning behind this recommendation?
Well, the digital payment revolution on a domestic as well as a global basis has me very intrigued. It just seems that more and more mobile platforms are taking, taking over traditional payment methods, as well as the small merchant is exploding right now. The cottage industry, where payment systems through a trusted platform like PayPal are becoming that much more dominant. PayPal is, outside of Visa and MasterCard, probably the most widely recognized of the big names out there in the digital payment universe. Additionally, millennials are extremely heavy users of Venmo, which is, a lot of the shared payments when you go to a restaurant. For instance, you just break out your bill and everybody can pay their own piece. So I see that as a strong undercurrent, that PayPal has that in their hip pocket, and the stock broke out on better than expected numbers here, and it just seems as if PayPal could be also an acquisition candidate here for a larger company that wants to be right in that space in a big way. But I find it to be a brand that is right up against Apple Pay and Google Wallet as probably the best go-to name right now in that sector in a 3 to 4 way race. But I think it has more room to go between now and the end of the year, and technically the stock is in very, very good condition.
Would you be able to share an overview of developments at PayPal since the start of the year?
Not necessarily. I think it's just building on momentum from last year. With the rollout of and the platform itself here is, again, they're moving into very strong partnerships with Visa as well as with Shopify. And I think that with Shopify, that's extraordinary because it almost seems like the default platform for Shopify users. And Shopify is just another super hot stock that, again, is after small home-based businesses for the most part, and just smaller businesses in general under 50 employees. So hooking up with Visa in the way that they have, where Visa took a large stake in the company here in terms of a partnership arrangement, as well as with the Shopify relationship. I think those are the two primary drivers, in addition to the Venmo story that's underneath.
Given the stock's strong performance so far this year, do you still recommend it as a buy?
Very much so. I think the stock can go from in the mid-50s here up to around 70, 75 over the course of the next 12 months. My price target.
What was your original rationale behind choosing Blackstone as a favorite for 2017?
Well, Blackstone is the largest private equity company that's traded, and one of the smartest guys in the room, in any room, is Steven Schwartzman, the CEO. Blackstone has a very, very enviable position here, where they were able to go in and buy billions of dollars of distressed assets in Europe and around the world during the financial crisis. And they're harvesting a lot of those assets here. Recently, Hilton Hotel, the Saudi Arabian government is going to put $20 billion behind Blackstone for infrastructure projects. They have a tremendous wealth of market leadership in a number of the markets they manage. And the company pays an extremely powerful dividend yield of, right now it's around 10%. So it's a limited partnership in the fact that they share in the profits every quarter. But I suspect that it's one of the cheapest financials in the sector here. And looking at how the private equity stocks in general they're just soaking in huge, vast new sums of investable dollars. And again, I like the fact that they've been able to go in and buy a lot of cheap real estate when it was, on sale, and they're now coming to market with a number of those properties here. So Blackstone, to me, is they've had 2 or 3 quarters of extremely good earnings here, and now they're starting to pay that out in the form of distributions. And as long as those distributions stay up in the double-digit area, Zach, and I think that the stock can go considerably higher from where it currently trades.
So what's the outlook for Blackstone now, and would you still recommend the shares?
Very much so. The stock broke out recently around $30 a share, It trades on a book value, basis of less than 2 times book, and you have, technically speaking, I think the stock can trade into the mid 40s. Schwartzman wants to take the stock to 100, over the next 3 to 5 years. I'm not sure how he's going to do that, if the market doesn't cooperate. But right now, the wind is to his back, and I don't see that. Right now, you look at what he's doing. They're raising $500 million a clip to go into the energy space here for distressed assets. So while everybody's in a tizzy over energy prices pulling back, Blackstone's out there looking for deals. They tend to zig when the rest of the market's zagging, and that's their expertise. So it's a great way for people that used to be excluded from this club, the private equity club, to come alongside very, very bright people and get paid, a phenomenal dividend yield, and at the same time enjoy what could very well be 50% or higher upside potential for capital gains at this point.
This is Zach Levine with MoneyShow, and we've been speaking with income expert Bryan Perry, editor of Cash Machine. Thank you for your time, Bryan.
Okay, Zach, appreciate the call.